Access Intelligence, I bought these today because I think this is a recovery play. And I explain what they do. Basically, they are a high growth tech innovator with strategic platforms that deliver audience intelligence, reputation management, and marketing communications for blue chips. And I think this 90% of their revenue is recurring. They've gone through a bit of a dodgy patch. But they did a trading update which states these figures. Now, I'll show you. But 74 million market cap, upside from the brokers, 129%. All right. Average daily volume is small. Not many people know it. No debt. So 2 million. They can write a cash, and they? But they came up with a trading update saying 7 million of EBITDA. I thought, okay. So this is their last set of results. No, yeah, last set of results. And if you look forward, let's look at the forecast going forward. So they're looking at doing from a loss here. And in fact, was there half year results? In fact, it improved since last year, but they're expecting to go from 7 million of EBITDA, but be profitable. So that cash level, it's always a bit worrying investing in companies that needed cash. They have no debt, and they wouldn't find it hard to get a debt. So I don't think it would need a placing. But I see decent upside here going forward. The chart is looking okay, but it says recovery play. It's something that, look at that. This is why I bought today, because it's been going in a straight line for ages, and it just popped up on no reason, no volume, on no news above 200-day moving average. I thought, okay, that's now a new high pretty much. It hasn't closed that level since when? Since back in October 2023. The results are coming out. It could bomb. Well, they've released a trading update, so pretty much people know what's happening here, and I think this is maybe the start of turnaround. Like I said, there is a the broker, like I said, has got 129% upside here. You shouldn't always trust the brokers, but not trust them. But I mean, of course, brokers are meant to be independent, but they are paid by the company, but they've got to be quite credible. So check that out. But so none of these are tips, by the way. They're just what I'm buying. I may be wrong. I've been wrong many times in the past. What can save my bad investment decisions is by portfolio management. Okay. So that's that. Also another one I liked. I've never heard of this company, MRIT Group, but they are genuine using AI for data analysis, and it seems like a bit of a recovery play. In fact, Lord Ashcroft was NED recently. He stepped down, but so market cap 14. They got a bit of debt there. Upside is 96%. They're saying, and you can see here half year results, which is the most recent set of results, are better color than this side. So that means to me they're improving. In fact, even the value is improving, you see. And if we scroll on the actual figures, you can see they've gone from a previous loss of 500,000 to, sort of 900,000 operating profit pretty much for the half year. That was to September. And if you look at forecasts, they're looking like beyond this line of forecasts, 2024, anything with the E, the estimation, because see, it's steady growth up to sort of 10%, not 20%, but you can always do better than that. But you can see here the improvement in margins, 18% EBITDA, 10% there. So hopefully this is a recovery play that'll play out. I've got about 70% upside 2026. It's a bit messy in the charts. Like I said, it's very illiquid. But doing research on them, they're into basically what AI is having lots of data, isn't it? And having intelligence sort of arrange it in some kind of readable format. That's what they do in three areas: global industry data, covering a range of key verticals, policy and political data. So they are quite illiquid. Average daily volume 5 grand. So if you're intending to put more than that in, you may not get out if it goes wrong. So be careful. In fact, I have got more than that in. But I thought, you know what, it's not very. What you can say about that, you see, because the chart is quite bitty, you can see there's lack of volume there. But what you find is the companies start rising, of course, the volume gets better, the liquidity gets better because people want buy rising stocks. And the opposite is true if it's going down. More people get out of it. And that's why momentum plays a key factor as well. when a share price starts going down, people start getting out, start selling it, and it starts drying up after a while because people sold. But so anyway, MRIT, have a look. Again, only going 1%, small little amount, not much in there.